All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to Investing 101, 3 simple steps to finding winning stocks in 15 minutes a day. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Throughout this presentation, please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I'll be available throughout this session to respond to your questions. This webinar is being recorded, and a copy will be sent to everyone who's registered for today. Now, a little bit about Sandy. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy has presented at NASDAQ and industry conferences on fearless investing. And in fact, prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She's also a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. So to get us started, here's Sandy Chaikin.
So as Joe said, my methodology will show you that you really don't have to be a financial expert to know how to pick winning stocks, because I'm living proof, having started investing in 2012. And I've been outperforming the S&P every year since I started. So I'm going to share with you the methodology that I use, and you will see that really it's not as complicated as those in the industry would like you to think. Before we get started, let me just read this brief disclaimer. We are not registered as a broker-dealer or investment advisor, either with the SEC or with any state securities regulatory authority. We're for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Users bear sole responsibility for their own investment research and decisions. Okay, I always like to frame the conversation with kind of what's going on in the marketplace. And the research shows us that the S&P has grown an average of almost 10% a year over the past 20 years, which is pretty good to get 10% on your money year over year. But few individuals have realized that same success, and that the same research shows that individual investors have only averaged 2.5%. And why is that? Well, because people buy on emotion, not fact. And that's what today's presentation is all about. How do you take the emotion out of the investment criteria and base your decisions on fact, not feeling? I'm going to give you the tools so that you have the facts to follow as opposed to depending on your emotions. So the challenge that we all face is, how do you find the winners? I think Joe in customer success says the biggest question he gets asked all the time is, okay, so how do I find great stocks to buy? How do I find the best stocks to buy? And the second biggest question typically is, how do I know when to buy it and how do I know when to sell it? And those are basically the 3 steps that we're going to be covering in today's presentation, so that you'll come out with some clear-cut rules, basically, on how you find the winners and how you know when to buy and how you know when to sell. So get your pen and paper out and be prepared to take some notes. But as Joe said in the beginning, this webinar is being recorded and will be sent to all of you who registered. So my promise to you in the next hour is that you're about to discover 3 steps to find winning stocks. And because we are all time poor, nobody that I'm aware of at least has enough time to do what they want to do in any given day. We need to do this quickly and easily. And the methodology that I've created, I do in literally 15 minutes a day. There's no at the most. I mean, usually it's even less. 10 to 15 minutes a day is more accurate. So this is just like a sneak peek of what I'm going to show you today. This is a classic bull. This is the kind of stock we all want to be in, right? And you will see this is a Chaikin Analytics chart. Everything that you need to know to make a decision whether to buy or sell this stock is literally on this chart. So we're going to be breaking this chart down, going over each of these, ribbons and kind of mountainous indicators here, so that you'll see that this is simple. You really will learn how to read this chart in a way that you can make an informed and a reliable decision from it. So why should you listen to me over the next hour? Well, I've beaten the S&P 500 and by correlation 4 out of 5 pros, because 4 out of 5 pros have underperformed the S&P over the last 10, 12, 13 years. But since I've been investing in 2012, I've beaten the S&P, thus I've beaten 4 out of 5 pros. And when I started investing with Chaikin Analytics in 2012, I started with stocks I was familiar with that I heard Mark talking about, like eBay and Yahoo, Southwest Air and Skyworks. And then as I began kind of spreading my wings and finding more stocks with my own methodology, I got into the small cap stocks in 2015, 16, and kind of half my stocks now are small cap, half are like large or mid cap. But in 2015, I was in such winners as American Woodmark, which was up at 98%, and Activision, which was up 94%. Last year, I had a series of triple-digit winners with Centa, Quad, and NACO, all up at least 114% for the year. So these are the types of winners you can find too with the methodology we're going to be getting to in a minute. And again, as I said earlier, I do this on 10 or 15 minutes a day. And I only hold 8 or 10 stocks at any given time. I sold a couple stocks this morning, so I have 7 actually now in my portfolio. This makes it manageable. I know people who have literally hundreds of stocks in their portfolio, and I honestly don't know how you could keep track of that. But whittling it down to 8 or 10 allows me to be very efficient at running through that list of stocks every morning and every night, which is part of my 15-minute routine. So let's go back a moment in time to when I started investing in the market. It was in mutual funds with the 401k plans that my companies offered. And in the 70s and 80s and 90s, I worked for Elizabeth Arden and L'Oreal in New York City, and then the Franklin Mint, which was right outside of Philadelphia. And they gave me a choice of mutual funds, which were great. So I invested in the Fidelity Magellan Fund, which was arguably the best performing fund of all times, and also Bill Miller's Value Trust at Legg Mason. So these were great funds that were part of my 401k plan, and that was going well. But as the funds grew and as my career got busier and busier and more demanding, I didn't feel I was confident enough to be managing it. So on the advice of a friend, I engaged a financial advisor. And what he did was take the funds that I was in, sell those, and put me in about 8 or 10 funds of his choice, which Mark has told me is pretty much standard operating procedure. And that went along for a while, okay. But then along comes 2008, and nobody was okay in 2008, including me. So as I was seeing these stocks, these funds rather, drop, and the stock market basically, start falling apart, I would call him and I'd say, "Gee, don't you think we should sell? The market certainly is headed downward." And the reply I always got was, "No, it's okay. Just ride it out. It'll come back, and it's better just to stay put." So not having the confidence to make that decision myself to tell him to sell against his advice, I wrote it down, but my portfolio was down at least 40%. I think it was more like 50%. And in the spring of 2009, I was so discouraged that I said, I just have got to take this away from his care and put it in my own care. So I severed the relationship with the wealth manager. I put it into a Vanguard account. I opened up a Vanguard account, and Mark and I were just getting together at the time. And he said, "Look, why don't you just put it in an S&P 500 index fund until you decide what to do?" And I said, "Fine." So that's what I did. But it was a very painful experience, and one that I hope I never have to repeat. And that is part of the reason why I'm here today speaking to you, is because I feel so passionate about the need for all of us as individual investors to know how to manage our own money. Because, I mean, after all, you work your entire life to generate that kind of money and set some aside for your retirement. Who cares more about your money than yourself, right? Um, so we all have a vested interest in one of the biggest aspects of our life, really, managing our own investments and making sure that these are sound. Um, and many of our clients are wealth managers, and that's great if you're working with a wealth manager yourself. That's terrific. This still applies to you, though, because you want to be able to be part of that conversation. You want to be able to look up a stock that your wealth manager may suggest, or look up the key stocks in an ETF or a mutual fund that he or she suggests, and say, well, wait a minute, I'm not so sure I want to be in those stocks. They're the bulk of that fund, and I don't have confidence that those stocks are going to be going up. And that's really, I mean, doesn't that make sense? That you want to take control of your own financial future? I mean, I certainly did. That 2009 meltdown was a turning point in my life, in that I'd worked so hard to put that money away, but then, watched 40% of it disappear. So that was my kind of turning point to say, I've got to take control. So, I share that story with you in the hopes that you'll learn from it, as I do, without having to go through those hard lessons. But let's pause a second here, and I want to ask you, what are the challenges that you're facing today? What gives you pause when you are thinking about buying a stock but don't, or you're thinking about selling a stock but don't? Do you lack confidence? Is the fear of loss, overcoming any common sense? If you could just put into your Q&A box the reasons, that you're facing, what the challenges you're facing, the concerns you have about investing. Okay, Rose says fear of loss. Stephen, I see you agree. Who cares more about your money than yourself? Absolutely, right? And Steve says how to find the best stocks for option trades and the why. Okay, that makes sense. I see there's lack of confidence in here, information overload. When to get in. I always get that. The timing is always a big question. When do you get in and out of a stock? Michael says volatility. AJ says uncertainty when positions go down. So uncertainty whether that it will continue to go down or not is probably what you mean, AJ. Okay, this is great. Thank you for sharing those thoughts. That gives me a good idea, and I have anticipated those concerns of yours because I hear them really repeatedly in every presentation I give. So my presentation today is geared to address those concerns, overcome those objections, and make you confident, fearless investors. So the 3 steps that we're going to follow today are tools. You've got to have the right tools that are reliable and proven. You want to know what to buy, what the criteria is before you buy a stock. You want to make sure it meets that criteria. And you want to know when to buy. When's the ideal time to get in, and when is the ideal time to get out? So let's start with the tools. You need tools that you can trust. And the tools that I trust are based on the power gauge rating, which you see right here is a very simple gauge. It looks like the gas gauge of your car. And although it looks simple, though it looks simple, it's not simplistic. What this power gauge does, it's a model. It's a model that Mark created after that 2008 meltdown, when he was in retirement, having sold his company 10 years prior to a division of Reuters. But he said, I worked on Wall Street 40 some years creating tools for the pros so that they could invest money of their clients in a more predictive way. And he said, now I see that there's so much money coming out of those traditional brokerage firms, like I was pulling my money out of Lincoln and opening up a self-managed account at Vanguard. There were literally billions of other people doing the same thing, millions and millions of people pulling billions of dollars. 40 billion, I think, was the count of money came out of the traditional brokerage firms and into self-managed accounts. But he said, Sandy, you're now managing your account, but you don't know what you're doing. You don't have the education, you don't have the tools to know what you're doing. So he said, what I'm going to do is create the same professional quality tools that I gave the pros, but I'm going to give it to you as individual investors in a way that you can understand. So it had to be simple, because I can't understand what is said on the right, which is what the pros were looking at. They could make perhaps some sense out of this and come to a conclusion. I have no clue. So the gauge on the left for Lamb Research, the same stock I showed in the preview window, which is now 150 on March 27th, and you can see where that's gone. This had a very bullish rating. So the rating looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. And that is the foundation of the Chaikin Analytics platform. That is what I'm going to be showing you the charts from. And it's the centerpiece of our whole methodology. So the power gauge is really important. Let me repeat that again. It gives you a read on the potential of a stock to out or underperform the market over the next 3 to 6 months. So you can see here, very simply, it's giving Lamb Research a very bullish rating. That means it's likely to outperform, very likely to outperform the market over the next 3 to 6 months. It's broken down into 20 factors that are basically pegged into one of these 4 components. So calls this a first glass. Oh dear, what's happening? My screen just disappeared. Joe, are we still live?
Hey, Sandy. Yeah, I can hear you right now. In fact, I just noticed myself that we were having seems like some internet connection troubles.
Okay,
But
let me just bring it back.
yeah.
Okay, I'm back. Can you
Very
see
good.
it now?
Yep, we can see it.
Okay, awesome, great. Okay, so John says it's called the power gauge, Chaikin power gauge rating. At first glance, I thought this looked like an objective awesome meter for stocks. I like that it includes fundamental and technical analysis for stock selection and timing. And those of you who are more advanced in trading and investing will know that most disciplines are either based on technical analysis or fundamental analysis. You don't really even need to know what that all means. You just know that they're both combined in the 20 factors that make up the power gauge rating. So here's the 20 factors. And I basically look at the overall rating for a stock when I'm evaluating whether I want to buy it or not. During earnings season, like we're in right now, I'll often drill down on the earnings component, because you can see a power gauge rating on each of those 5 factors. But typically, let's just focus on the overall rating. But know that you can get a rating on any of those 20 factors. So why is this model important? Well, going back to the original statement I made in the very beginning, whereas the S&P has grown an average of 10% a year over the last 20 years, yet humans have only grown, or humans managing their own portfolios have only grown 2.5%. That's a huge difference. That's why it's so important to depend on a model, unobjective, unbiased. And this very well-respected investor and analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. So who hasn't been swayed by fear? You know, you hear something on CNBC or Fox Business, and you go, "Oh my God, I'm in that stock. I better get out of that stock before it drops." Um, you know, that can really screw up your overall profits in your portfolio. So that's why it's so important to have an unbiased model to lean on to give you guidance. Now, just so you know how reliable this model actually is, the Chaikin Power Gauge rating, NASDAQ asked us over 3 years ago to create indexes based on the Power Gauge rating. They said, take these 3 funds of ours, these 3 indexes, large cap, small cap, and dividend achiever, overlay the Power Gauge rating on these stocks in these baskets, and weed out the bearish and the neutral rated stocks, which is what we did. And so 3 years ago, we launched what you see in the middle column there, the NASDAQ Chaikin indexes. And you can see in the 3 years that they've been in the marketplace, they have seriously outperformed their benchmarks. I mean, look down at small cap, for instance. It's up 44%, where the benchmark, which does not have the Power Gauge rating overlay, is up only 22%. So these are up almost double. I mean, that's astounding if you can get that type of gain. These 3 NASDAQ indices, New York Life has registered with the SEC to bring them out under their own umbrella, and they will be launching mid-May. So that's how powerful this Power Gauge rating is. You know, it's I can't say endorsed, but New York Life has registered these because they feel it is important. Okay, so media also has covered the Chaikin methodology and the Power Gauge rating, as well as some seriously big hedge funds like Soros and Paulson. And individual investors are grateful to have it as their guide as well. So what Norm says here is, through following your excellent system, my portfolio now stands in excess of $1 million. Before Chaikin, I would make money and then lose it, i.e. because he was trading on emotion. Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So bottom line, you really need to have this methodology, a methodology, a roadmap. You wouldn't get on and start driving without knowing where you're driving. It's the same thing with buying a stock. You don't want to buy a stock if you don't know where it's headed and what you're going to do in terms of getting in and out of that stock. Okay, so let's move on to the second step, what to buy. And again, I want to reiterate that Power Gauge rating is really the foundation of what I'm talking about in steps 2 and 3. So can you all just kind of give me a thumbs up if you're on board with understanding it, because it's really critical to everything that I'm going to be talking about from now on. Okay, Jack says, using Chaikin, stayed on AAOI, and they had a nice earnings beat. Awesome. And he's hoping for a nice pop. He had an options on this one, Jack. That's great. Okay, I'm seeing some yeses go ahead, so I will keep moving. Carol, AJ, thank you. Okay, great. Let's keep going then. Okay, what to buy? This is everyone's biggest question. What do I buy? Well, we have a name for this. We call what you want to buy a classic bull. And it has to have these three criteria to be categorized as a classic bull. And again, you see Lamb Research on the right. So let's take the stock chart for Lamb Research and break it down so you can see where each of those criteria plays a part. Okay, this is a stock that I bought. Most of the stocks I'm talking about today are stocks that are in my portfolio or have been in my portfolio. So you're seeing kind of it's like looking over my shoulder, and I'm going to explain to you why I did what I did. So this is a stock that I had on my watch list as part of my 15-minute a day monitoring my portfolio. I flip through the stocks in what I call my stocks list, which are stocks that I own. And then I have a watch list that I call Sandy's watch list, and I flip through that as well. If I'm looking for buy candidates, though, in the watch list, I'll only go through the very bullish or bullish rated stocks, because if it's less than that, it's not a consideration. Think back to the slide right before this. The power gauge rating needs to be bullish to be considered a classic bull. And if I'm going to buy a stock, I want it to have everything going in its favor, including a bullish, hopefully a very bullish rating, as this stock does. So you can see up here in the far left corner, the little arc says very bullish, and it correlates to this green ribbon down on the bottom of the chart, which you can see has been green or bullish for most of the year, with a few ticks over to neutral, which is yellow. So the power gauge rating is saying this stock, since last June, has a very strong potential to out or underperform the market. And lo and behold, last June, it was like, what, 70, below this chart, 70, and it's now 150. So that's right? The power gauge did put you in the right direction for this stock. Okay, the second criteria was that you wanted to have strong relative strength. And what does that mean? Well, most investors, myself included, compare ourselves to the S&P 500. So if you're not going to get above average returns, like above that 10% a year average return that the S&P gets, you might as well just invest in the S&P 500 and not sweat about it. If you want to have outsized performance, like in a Lamb Research, which is up 42% this year, then you're going to want to be outperforming the S&P 500. And you can see by this green, heat map here that Lamb Research, since looks like mid-May of last year, has been outperforming the S&P 500. So that checks off that criteria. I'll come back to overbought, oversold, which is a great indicator to help you with timing, when to buy and when to sell. But let's move up here to the Chaikin money flow. Chaikin money flow is an indicator Mark created some 35 years ago on Wall Street when he was creating tools for the pros. And what this does is it measures the professional money coming in and out of a stock. So you see by this green mountainous kind of range here, that's money coming into the stock. That's, investors, professional investors are buying this stock. When it's red here, you can see it means they're selling, that the pros are selling. So why is this important? Well, it's very important because the pros really move the price. The price of a stock, unlike the price of a bottle of fragrance that I marketed, say Karl Lagerfeld fragrance when I was working with Elizabeth Arden, that would be, say, $100 an ounce, whether you bought that in Macy's in January or you bought it in Bloomingdale's in June. It would be the same price. That's obviously not the same case with a stock. The stock price moves up and down, kind of does all this zigzagging business. And a lot of the movement up is based on the fact that there's a strong demand for this stock because the pros are buying it. So this chart actually really proves that point really well, because you look at all else being equal, relative strength and power gauge have been equal, consistent for the last year. The only thing that's really changed is money flow. But look what happens when money's coming out. The stock tends to go sideways. But look what happens when you start really escalating and a lot of money starts coming in. Then you see these really big price moves. So that's the best thing you can look for, is this big chunk of green here. And for it to be in line with power gauge rating and relative strength. You can see by this yellow arrow down here, this is when I bought the stock in February. The green triangle is a buy signal. I'm going to be pointing them out along the way. It's really part of step 3, when to buy and sell. But we'll point them out along the way so you can see them in real life examples. But we have 6 pairs of buy-sell signals. I've overlaid the money flow here so that you can see that it did trigger back in February 23rd. That's when I bought the stock. And I was confident that that was the good signal, because in looking at previous, well, there was only one, but in looking at the previous signal, it did, in fact, trigger, when this stock was on the move. So I felt, okay, this is good. Everything's green. I'm going to buy this stock. And now I'll explain what this overbought, oversold signal means, or indicator means rather, because this has significance in why I bought it when I did. You want to be buying a stock when it's dipping down like this. It's called oversold. You want to be selling it when it's peaking up here. So I got this money flow, which said to me, there's a lot of money. It alerted me there's a lot of money coming into this stock. And there was, as you can see by this mountain here. And this stock was also oversold. It was below this 30 indicator line here, which is the ideal time to buy it. Because stocks don't go straight up or straight down. They zigzag. And you want to be buying it when it's zigging down, not zigging up. Now, I sold it when it was up here. Now, I sold it about 5 weeks later. No, actually 4 weeks later, when it was up here. When it hit this upper volatility band, I thought, this is a great time. I'll take my profit. You can see that it was also correlating to this overbought condition, which is when you want to sell it. You don't want to sell it when it's down here. This Lamb research is really a classic study of everything you need to know about a stock and when to buy it and when to sell it, because it gets to all of those issues with just this one chart. So, if there's one thing you take away today, remember this chart and remember why I did what I did. I sold it when it was up here, when it was peaking, bumping up against this upper volatility band, which are like these little channels here. And they kind of help you identify the range of a stock price. And typically when it goes outside of that range, it'll reach its high and level off. This has not exactly happened true to form with Lamb Research. It's gone outside of its range now for a couple of weeks. Very unusual. But obviously I didn't know that at the time, so I sold this thinking I'm going to take this nice 9% profit in a month and be happy. Okay, so then I knew that they were reporting earnings, and there's a lot of volatility around earnings. And you can take that to your advantage, take advantage of those earnings volatility and use it to make a quick profit. So I got back into this stock on the 17th, the day before they reported earnings. And I had confidence because in looking, let's go to a 5-year view. In looking at the 5-year view, I could see that this stock has beat earnings. These little green EPS means every quarter when they reported earnings, they beat analyst estimates. And you can see this stock has had a really nice run since 2013. So back here, before this last earnings report, I was pretty confident, seeing that everything was green. There was a ton of money coming into the stock again. I was pretty confident that this was going to exceed, once again, analyst expectations, and lo and behold, it did. So a few days later, I sold it. Again, it went outside of this kind of channel marker, so it was like really off the charts, literally. And I thought I'll just take another 10% profit. So in a matter of like 2 months, I had like a 20% profit in this stock. This stock has since gone up to $150. I sold it at $140, and I thought that was great. But this clearly is a big winner, and probably one, certainly what I would consider one of the best stocks, of the year 2017. So I would certainly put this on your watch list if it's not already on there, LRCX, and watch this stock for a pullback, because this is in my opinion, a very strong stock. Okay. I talked about the way a stock price moves. This was charted by a Dr. Wyckoff almost 100 years ago, when he was teaching the stock market and how stocks move. And as I said earlier, they don't go straight up or straight down, they zigzag. And you can see that zigzag pattern here. So understanding this pattern will help you understand timing, when to get in and out of a stock. Because you want to buy a stock when it's in this downward dip that correlates to that oversold condition on our chart, and you want to sell it when it's up here. So let's go again to another chart. This is another stock that I own, Excelis. I bought this recently. I bought this on April 18th. So what was that, about 3 weeks ago, I guess, 3 weeks ago at 18, where you see that yellow arrow. And, you tell me, why did I buy this stock? How's the power gauge look? Pretty good, right? Pretty strong for almost a year. Relative strength, outperforming the market since last August. Money flow, strong money flow coming into the stock with a little bit of outflow here, but there is normal. It's normal to have some red in the course of a year or so with the stock. So that's not room in itself for panic, unless other things go red. But strong money was coming into the stock. So I thought, well, this is a good stock too. I'm going to get into this stock. I bought it at 18. I looked at the 5-year view. Again, very similar to Lam Research, this stock had been outperforming analyst estimates, exceeding analyst estimates since, looks like, about mid-2014. So I took a chance using this stock in tonight's webinar because it reported tonight after the close. So, Joe, do you know if this stock, have they reported yet?
Yeah, in fact, I noticed right before we started the webinar, it was up about 3% in after hours trading. And right now I just checked and it's up about 2.5% right now. And that's on top of closing today at 2%. So, so far, pretty nice boost.
Great. So it probably did exceed analyst expectations once again and will spike up. And that could be, thank you, Joe. That's great to have that report from you. It's likely that it will spike up as it has in the past. I mean, you can follow this. Now, this is weird. I don't know why it would drop after it reported and exceeded, but it did. But in most cases, it spikes up and then pulls back a little bit, and that is typically what happens. So I will watch this stock tomorrow and the next couple of days to see that I might be a good time to get out of that stock. And we'll cover that a little bit more in the when to sell. So speaking of selling on earnings, I sold a couple stocks today on earnings. I sold Bruker, BRKR, that reported last night. It was up 6.5% today. I sold that. And I sold ARRS, which was also up even better. It was up 10% today. So I sold that. So, that's the volatility during earnings can be your friend if you know how to use it, which I'm showing you. So how did I know to buy Excelis in the first place? Well, a really easy way to get stock ideas is to read Mark's market commentary every Sunday night that he puts out to our subscribers. And he will include some stock ideas, including what he calls stock of the week. And a couple of weeks ago, he put out 2 stocks of the week, Excelis and Entergris, both of which have had some really nice moves. So that's how I sometimes get my stock ideas. I put them on a watch list, and then I wait for like a signal, like a buy signal to trigger before I'll buy it. But that's one really good way and very easy way to get stock ideas. I mean, just watch what Mark does and what he reports on. Another way that I get stock ideas is to use the screener. And this is the feature that we've had on the platform for about a year. What it allows you to do is to screen for stocks that meet your criteria. So it's pretty cool. And you can literally plug in these criteria along the way and hit screen, and it'll filter out all those that don't meet your criteria and give you stocks that meet that criteria. So yesterday I ran a screener. I said, show me the stocks in the Russell 3000. So I'm starting with the universe of almost 3,000 stocks. I only want stocks that are bullish. I only want stocks that have price to sales that's strong, insider activity that is strong. And these are typical of factors that I often screen for because I think they're really important. Price to sales or free cash flow is really a helpful factor. Insider activity, insiders only buy for one reason. They think the stock's going to go up. So I plug those in, and then for a classic bull pattern, remember what we had. It had to have a bullish power gauge rating, and it had to have a strong money flow and strong relative strength. So I put those in as strong as well. So it would fit that classic bull criteria. And then I'm looking at the mid and large cap stocks for now. And that gave me 10. So I started with a universe of 3,000, literally in seconds. I got it down to 10 stocks, which are the ones you see here. I point out WellCare Health, because I'm going to drill down on that, because what you can do from here, you can save this in a list. You would just hit over here on your workstation, save it to a list, and you get this list. I name it Sandy Bulls, and here's the list of the 10 stocks on the far left. By clicking on any one of these stock symbols, you'll get the chart. So I click through them, see what I'm interested in, and then by clicking up here on the plus, I can move this into my watch list if I'm not ready to buy this right now. But I like the stock, and I want to keep it in mind. So that's how easy it is. This stock reported yesterday. You can see it's up for 5% as of this morning. That's when I took this slide, or maybe I took it yesterday. I can't remember. But you can see that this is a really nice stock. It's at probably an all-time high right now, so I wouldn't recommend buying it now, but this is how you can get stock ideas and put this on a list and buy it perhaps on a pullback. So I'm going back to our time-starved comment I made in the beginning, saying there's really not enough time in the day to do the work Chaikin puts before me in minutes. I'm wowed. Cheryl gave us this a couple of years ago, even before we had the screener. But now that we've got the screener, it's a really big wow, truly, and it's saved an enormous amount of time by doing that simple stock selection for me. So knowing what to buy is important, but it's also really important to know what to avoid, because you want to avoid getting into these disaster stocks that are talked about so consistently on the news, like Under Armour, Lululemon. I mean, you hear about these stocks on and on and on. How do you know whether what you're hearing is reliable or not? Well, the classic bear pattern is the complete opposite of the classic bull that we looked at earlier. Here's an example of a classic bear. You can see instead of a sea of green, you've got a sea of red, and persistently for a year. Red power gauge ratings in September, relative strength underperforming the market for the last year. And for the most part, professional money has been coming out of this stock, and you can see how that's reflected in a downward trend in the stock's price. And knowing this going into earnings is really valuable information. Not only if you own this stock, you would want to get out of it before they reported, because they would most likely disappoint. But if you're trading options, this could be these sell signals, just like there's little green triangles for buy signals. There's red triangles for sell signals. This one happens to be the relative strength. It says the relative strength is breaking down on this stock. And you can see that the price reflects the move. Reflects exactly what that indicator is saying. Now, notice they did exceed analyst expectations a few days ago when they reported. Would that change my mind about buying this stock? You see there's a little bit of green, there's a little bit of money coming back. So tell me, if you would, put it into your chat window, does this give you the confidence that you should get back into this stock now, that now might be a good time because it's undervalued? And I'm seeing no's here. Rose, Michael. Yeah, that's good. Yeah, no, you don't want to get into this stock. Don't be tempted. Stephen, Eddie, no way. Yeah, you're absolutely right. No way. You don't want to get into the stock. So even when you see this nice little, oh, it went up a couple, 5% or so on earnings beat, and the power gauge, the money flow is now green. Looking at the power gauge, remember the power gauge rolls up 20 factors. So you've got one factor here with relative strength. You've got one factor here with money flow. You've got 20 factors telling you this stock is bearish. So the power gauge rules. If you got a bearish power gauge, forget it. Or if you're an options trader, that's what you want to see, but because those will typically underperform and go down, which is what you want if you're trading options. Okay, let's move on to our last step, step 3, knowing when to buy and sell. And I think this is the hardest part. I mean, I think it's pretty easy for me to know when to buy, but selling, I think, is a little trickier, and it's taken me a while to figure it out. But I figured out a pretty good formula now that really works for me, and let's go through that. The signals, the buy-sell signals, those are the 6 pairs you see on the left, reflected by those triangles. When those trigger either buy or sell, they certainly are a really good alert saying, hey, this might be a good time to get in or out of the stock. And that overbought, oversold indicator, which measures kind of that zigzag pattern of the stock. So you want to be buying a stock when it's coming down here at its lower price, and you want to be selling it up here when it's typically at a higher price. Well, how do you know when those buy and sell signals trigger? Well, we have what we call this alerts view on any list. I've taken my watch list this morning and overlaid this little bell here, clicked on the bell, and it automatically gave me, there are 29 alerts on stocks, starting with the buy signals. So it's telling me, like on DTE, there's an oversold buy signal today. And if you remember going back to that screener example where I ran the screener yesterday, DTE was on that as well. So I'm getting 2 confirmations on DTE. The screener highlighted it for me, met all those great, classic bull criteria. And now it's got a buy signal on it. And better yet, it's oversold. So you see it triggered a buy signal this morning, which correlates to the dip here under 30. But look at that money coming in. I mean, this looks like a great stock. So this is on my watch list. I'm looking at this carefully. This might be a good stock for me to buy to replace, some of the stocks that I sold this morning, because I've got some cash now to reinvest. That's kind of how I do it. So what I typically do is go through these alerts and see if any of them provide the right environment to buy a stock right now if I have the cash to buy it. Knowing when to sell. Okay, there's a couple of different reasons I would sell. One is to take the profit. And on Wall Street, they call it on strength. That means like when you're at a high. On strength means you don't want to buy it when it's lagging. You want to you don't want to sell it when it's lagging. You want to sell it when it's up high at a high price so that you can make a nice profit. I also sell if I anticipate that a stock is going to break down. So these are two kind of completely different scenarios, and we'll go through examples under each scenario. So let's start with when I'm selling to take a profit. When the profit hits that upper volatility band, remember that was what I was pointing out on Lamb Research, that it was that channel line. I'm a sailor, so I think of those volatility bands as, let's look at an example here. These are the volatility bands that I'm talking about. And when they go outside of that, they typically reach a high and will level off after that. Let me just go back a sec. When the price is overbought, when it's zigzagging up, that's a great time to sell it if everything else falls in place and you want to sell it. Or if it spikes after strong earnings reports, as I showed you on that Lamb Research, and Excelis is likely to spike up tomorrow. And stocks typically spike 5 to 10% if they come out with a strong earnings beat. And that can take anywhere from like 1 day after to maybe 2 or 3 days after, typically, before they level back down again. And what I'm not shy about doing is buying the stock back, like I did with Lamb Research. I sold it when it peaked at an all-time high, and then when it dipped, I bought it back. And that's a strategy I use as well. So let's use Maiden Holdings here. This is an insurance stock, and look at what's happened to this. So I bought the stock here in early December at 16. And why did I buy it? Well, look at the chart. Persistent since August to December. That's pretty good. Strong power gauge rating, strong relative strength, very strong money flow. So that looked good. Bought it here, and it had this really nice spike up here. And it was bumping up against this volatility band. And I thought, well, looking at the chart, money flow had just started to go negative. And by now, I'm a big believer in money flow, because when that starts, even going slightly negative, the price tends to go sideways, even if power gauge rating and relative strength stay strong. So I thought, wow, everything's, I had this really nice run right up here. It's bumping up against its upper volatility band. Money flow is just turning negative, so it's likely to level out. I'm going to take my profit now. And I sold it up here at a high. And was I glad I did, because I sold it at the all-time high. They pre-reported their earnings 2 days later. I don't know why a company would do that, but I don't need to know why. They just did. And the stock dropped 10%. And then when they reported earnings, like another 10 days later, I mean, it dropped again another 10%. So this stock is way down in the gutter right now. It's down 36% from when I sold it mid-February. I mean, that's powerful, right? I mean, I sold it because it hit the upper volatility band. It was overbought. You know, it was peaking up here. It was at its all-time high. And the main thing being that money flow had just turned to neutral. So that's the formula I use. And you can see by this example that it worked really well for me, because I would have been crushed if I had held on to this stock and still owned it, and it's 36% down from its high where I could have sold it. So let's look at another example. This is the stock that I just sold last week, National Commerce. This is a bank stock. This was on a screener, so I had it on my watch list, and I bought it when I got the signal, oversold signal on December 5th. I bought it at 34. And you can see why I bought it. Dipped down, right? Oversold, even, you know, that's why it triggered this buy signal, and everything else was lining up. So I had a nice run with it up here again to its upper volatility band, and went into earnings feeling pretty solid that this stock was going to outperform or beat analyst estimates, because look what's happened over the last year. It's all green on the earnings overlay. So it's beat, and look, it spikes up, right? So just looking historically, it spikes up and it lasts for a couple of days. It did spike up. Spike lasts for a couple of days. So I sold it at 40, like 2 days after it reported earnings. And then because I anticipated it would drop back down again, that's exactly what's happened. But you can see all this, you know, you don't have to be a genius. You can see it all right here. Just look at the patterns. It's all about pattern recognition. And the chart gives you everything you need to compare those patterns and draw a conclusion from them. And use those patterns to guide you for buying and selling. It's really that simple. Just look at the history, bumps up against that upper volatility band, and sometimes you're going to say, oh damn, I wish I didn't get out. Like with Lam Research, it's up another 10 points since I sold it when it hit its last volatility band after earnings. But you know what, you can't be greedy. I'm happy with the 20% that I made on that stock, and I put that money back into other stocks right now that'll hopefully give me other wins and profits as well. So let's look at a breakdown. I typically don't get to this point because I'm typically out of a stock before all these things happen to it, all these bad things happen to it. But here's what's a good guideline for when a stock is breaking down and gives you the alert that, hey, you better think about getting out of this stock. Certainly when the power gauge goes neutral and another indicator turns negative, especially money flow. Obviously, if you get a sell signal, that's a big alert. Hey, you better look at this. And if the price drops before that orange line, which is a long-term trend line, or that lower volatility band, which are those like channel markers around here that I was pointing out. So this is a stock that I owned last year. I bought it right after the Brexit vote, when the market dropped like 5 to 7%. I was ready with a laundry list of stocks to consider buying, and Quad was one of them. And whoops, it triggered a what's this? A momentum breakout buy signal back June 15th of last year, June 24th. I'm sorry. Bought it at 21. And then I sold it in here. And I was a little late in selling it. You can see power gauge had turned neutral. Relative strength was still strong, but money flow was negative. And once that pattern is set up, I mean, look what happens. It starts trending down. So I should have sold it earlier. But then when it reported earnings, if it's neutral, if it just met earnings estimates, it shows up gray like this. So it met estimates, but it did go up a little bit. We were going into the election, and I thought, this is below this orange line, this 200-day trend line, and it's dipped below that lower volatility band. I thought I better get out of this before we get to November 8th, 5 days later. So I sold it. I took a 12% profit, which isn't a big profit, but I got out and didn't look back, because the stock, as you can see here, has gone sideways. Once the relative strength turned negative, underperforming the S&P, you can see what happened. It just has gone sideways. And they did just report. They must have had something good in that report, because it spiked up and pulled back again. But it's just gone sideways. And I've bought and sold like 3 other stocks with the money that I took out of quad. So there's an opportunity cost too if you sit in a stock and ride it out, because that money could be in a Lam Research or an Excelis, growing 30-40% a year, other than having it just sit in a stock like this that is going sideways. So that's something to keep in mind as well, because I know it's painful to sell a stock and take a loss, but you're using that money just to sit, basically, where you could be using that money in one of those winning stocks. So it's not just me that uses these kind of rules that I've come up with. Anil, who teaches about how to invest in the stock market with the adult education program at University of Delaware, uses Chaikin, and he teaches with Chaikin in his class. And he's had some really nice profits from using these rules, as you can see here, 22, 17, 15, 15. Nice profits, 23% profit in less than 3 weeks. So he said his rules were more complex, but he's going to follow yours in a test portfolio. He did that, and he's now using the rules because they work. So you don't have to take my word for it. You can do it yourself, test it yourself. So let's give you a little bonus step, because we have a few minutes left before 5:15. Profit during earnings. You can profit on the spikes. You can also profit on the downside. And this is a stock, Schlumberger, that Mark featured on a webinar he gave last week, or I guess it was 2 weeks ago, right before they reported earnings. He used this, and a relative strength sell signal had triggered that same day, where you see the red arrow. And he used this on his webinar, saying this is a good candidate for a vertical put spread before they report earnings in a few days. And those that followed his advice did have a really nice trade, because you can see, they disappointed and the price dropped significantly. So that's a little bonus there of how to use it to trade options. Okay, let's wrap this up. 3 steps to boost your profits. You want tools that you can trust. For us, it's the power gauge rating. You want to know what to buy. That's the classic bull pattern that I outlined, and when to buy and sell, and that's using signals as well as those sell rules that I've recapped for you. Okay, so I made a promise to you in the beginning that you were going to discover 3 steps to find winning stocks and do it in 15 minutes a day. And hopefully you agree that I've met my promise, so that you'll now be confident versus fearful investors. And start thinking about where you might want to spend some of those profits, because you want to put some skin in the game and kind of have fun with it and have a goal in mind. John Malden is another partner of ours who's a well-regarded financial expert with Malden Economics. And he says he's impressed by what Mark has done. His analysts are enthusiastic users of Chaikin and use it to analyze the trades and recommendations of our writing team, giving them feedback and insight into their own ideas. Mark's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. And so they use the Chaikin methodology. And Mark is in fact going to be presenting to their audience May 24th with how to use the Chaikin methodology as individual investors. But that's a very strong endorsement from a well-regarded partner. So your simple path to profits is really the Chaikin Analytics platform. We've added some things that I haven't had a chance to get to. We touched on the screener. There is an options, what we call options play. It's an overlay to guide you on the best options strategies. And the earnings, I did point out a little bit how these earnings features can help you with taking advantage of those volatility spikes. Our very newest feature is pretty cool. It's called the Stock Discovery Engine. It's like Pandora for stocks or Spotify, in that you can seed it with a stock. I've seeded it, as you see here, with Lamb Research, and then it'll give you other stocks like that. So talk about an easy way to get stock ideas. Take a winner like Lamb Research or Excelis. See what else is going to come out. AMAT is on this, Applied Materials. It's the first one on stocks like Lamb Research. I own this. I bought this a couple of months ago. But these are other candidates. And now that I've got some money, I will flip through these charts and see what I think. So the platform usually sells for a subscription of $1,950 for a year subscription. We're taking $200 off a subscription because you are a webinar registrant. Just to recap some of the things that are included: the new stock discovery, the options, the market insights. That's where I got the stock idea to buy Excelis. Coaching calls, which I highlight, both in small group and one-on-one, are incredible benefit to our subscribers because they get you up running as early as tomorrow. When you subscribe tonight, you'll be in a class as early as tomorrow with Joe. He'll show you how to create a list, how to use the signals, how to overlay the earnings on it. He'll get you comfortable. And if you're not comfortable enough from the small coaching calls, the small group coaching calls, you can schedule a one-on-one and have your own personal time with our customer support representative. There's no extra fees for that. There's no extra charge for the one-on-one or anything else. There's no data fee. It's all coming bundled into the platform and the one price of $1,750 a year. But when you subscribe by midnight tonight, we're giving you an extra incentive of taking an additional $100 off and have the platform for only $1,650 a year. So that is what we want you to do. Become fearless investors, become confident investors like Will here, who said, Sandy affirmed that I know more than I think I do about how to use the tools. She's using them successfully with a similar novice background to mine, so I can too. So, trust yourself, because with the right tools and the right methodology and the right plan, you too can be a confident, fearless investor. So, Joe, I'm going to turn this back to you. I thank you all for your attention, and good luck with your trading.
Awesome. All right, Sandy, well, thank you so much for the presentation. I saw a few people chat in saying that this is one of the best presentations that you've delivered yet. So
Awesome.
Nice job here. It's always good to hear that sentiment. So yeah, to reiterate, Sandy's offer here, $1,650 for a full year to Chaikin Analytics. This includes our support webinars. I saw a few questions about analyzing the market. We host pre-market analysis webinars twice a week where we go through and use different index ETFs to get a sense for what the direction the market is headed in, which is of course very valuable for finding a direction for what stocks to analyze. But of course also, in order to access the program, we do have individual one-on-one sessions, just like Sandy mentioned. In fact, I saw one of our subscribers was on today and just chatted in about setting up a one-on-one session. So we're going to go ahead and take care of that tomorrow. But for anybody else who subscribes, there's really no better way to get in touch than and really get access to our program than with Sandy's offer here for $16.50 for a full year to Chaikin Analytics. I chatted out the access link. All you need to do is go to chaikinanalytics.com/Sandy, or you can give us a call at 877-978-6257. Once you do that, it'll take you right to a checkout page that looks just like this. So pretty simple, pretty straightforward. The code should automatically be applied, so you won't have to worry about typing that in. But with that said, I want to thank you all for coming out. Keep an eye out for the recording tomorrow. We're going to email that out to you. But in the meantime, make sure to take advantage of Sandy's offer here and get signed up for our onboard session. I'm going to be hosting that at 2 o'clock tomorrow, all about how you can get up and running with the most important pieces of our program so that you can have a full week when the market opens again on Monday. Of course, we'll get through Friday first, though. So in the meantime, everybody have a great evening. Thanks for coming out, and we will see you tomorrow on the onboard session.